Stocks trade firm but in a band. Oil and gas as well as realty stocks clock strong gains, while the financials drag today and mid-caps outperform.
CNBC-TV18 learns that thousands of wallets of Paytm Payments Bank were linked to a PAN card. There was violation of KYC and anti-money laundering norms. The business was co-mingled with promoter group companies and false submissions were made to the RBI. The grave violations pressure the stock.
Tata Motors Q3 earnings beat the expectations of the street, with JLR seeing strong margin expansion and also guiding for profitability improvement. Cash accruals also improve, pointing to further debt reduction in the future. The stock jumps.
And SBI takes a profit hit due to a one-off wage hike impact, and margins compress as deposits get repriced and their accretion slows. But loan growth is healthy and asset quality improves. Analysts retain their positive bias.
UPL slides on reporting a big loss following a sharp contraction in the margins, while Interglobe Aviation, owner of Indigo Airlines, perks up on a jump in profits and on the back of the improved yields as well as higher revenue per seat kilometer. Hello and welcome. You've tuned into Business Lunch on this Monday afternoon. I'm Nisha Podar. As always, with me is my co-anchor Pavitra Parekh. So Pavitra, on a good note, we have started this particular week. And Nifty 50 at the time of lunch hour is not too far away from the day's high level as well. So 21,936 on Nifty 50. It's been a tight band in which Nifty 50 has really traded in the entire session and closer to the high point at the moment with 80 points gain. When we talk about Sensex, about 180 points gain there. Bank Nifty is the one which is almost flattish but still showing in the green zone at the moment. Mid-cap universe, that's where the actual action really lies. In fact, it is showing quite a bit of outperformance to the key indices and all the pockets. It's also supporting the strength of the market. But another pocket that is really doing extremely well for quite some time now is the PSU basket. So apart from Tata Motors, which beats the expectations and therefore zooming in trade today, really all the PSU counters are the ones which are percentage gainers on Nifty 50. On the downside, let's take a health check on that. UPL, Bharti Airtel and Bajaj Twins are some of the percentage losers on the downside on Nifty 50. Pavitra.
I'm just going to pick up on your PSU point because there's just no looking away, right, from that index. Yes. You were mentioning the Nifty names, but even beyond that, there's such a huge rally. If you look at the CPSE index, that's up around 3.5%, 3.6% right now. So like Nisha was mentioning, you have names like Power Grid, but a lot outside as well, and a lot of the, green power related companies. So SJVN, NTPC, NHPC, all of these seem completely huge moves right now. SJVN is up around 17%, like you can see. You have all of the OMCs also doing very well. BPCL has been on a complete tear, and BPCL, HPCL, IOC, all up on your screen, all doing very well. Some of the PSU banks also are really having, their moment or their weeks, if I can say that. You have UCO, IDBI, Punjab and Sindh on your screen. I've just named a few of the smaller banks, but there's a whole host of them which are moving quite well. On the downside, you do have some stocks which are reacting to, news or earnings coming through. So you have UPL, Paytm, Bank of India. So there are names which are seeing pretty significant cuts on the downside as well. And I do want to mention that, all of the railway stocks which have been correcting ever since the budget day are pulling back some more. So names like IRFC, IRCON, all of them seeing a little bit more of a cut. But of course, after a very sharp run up. Let's kickstart the show now by talking about two swinging moves on the index, on the upside and on the downside. The stock which is seeing the biggest gain is, of course, Tata Motors, up 6% right now. So Sonia is here to tell us about the Q3 earnings. Sonia, there's just no stopping Tata Motors.
Absolutely. It's been a really spectacular run for Tata Motors, as you rightly pointed out. The stock has now doubled in the last 1 year. And if you look at the performance, just in trade today, it's a 6% rally that we've seen. There was a big beat on earnings, largely coming in from the Jaguar Land Rover unit. JLR's EBITDA margins at 16.2% versus an expectation of 15.1%. But I think the kicker is the fact that for the second consecutive quarter, the company has raised their guidance on Jaguar Land Rover. They are very confident also of meeting, their guidance for positive net cash by FY25. They also said they continue to expect the operating cash flow to support the net debt of less than £1 billion by the end of FY24. The EBIT margin for FY24 is now expected to be over 8%. Earlier on, they had scaled it up to 8%, but now they're saying the EBIT margin will be over 8%. So second consecutive quarter of raising their guidance. Now, most brokerages have come out with an upgrade on the target price. In fact, we'll just go through the list very quickly. Morgan Stanley, Jefferies, HSBC, Goldman Sachs have all raised their target price and earnings estimates on the stock after the spectacular numbers yesterday. The reason for multiple upgrades, one, is that it is the second quarter of JLR raising their EBIT guidance. Macquarie says that the company has delivered on growth, on margins and on deleveraging. Goldman Sachs says that the net debt levels in Jaguar Land Rover have declined by £675 million. And Jefferies expects a better quarter 4 led by seasonality and improving supplies at Jaguar Land Rover. Back to you.
All right. Thanks so much, Sonia, for getting us all those details on Tata Motors and what a big beat. And, of course, being rewarded by the shareholders on the exchanges. But what's being punished because of earnings is UPL. Take a look at that counter. 8.5% down in trade has been under pressure after reporting an extremely weak set of third quarter earnings. And my colleague Sonal Bhutra is right here with the earnings fine print and what the brokerage downgrades have said and the future that it looks like for the business performance. Sonal.
Oh yes, it is a weak set coming in from UPL. No one expected loss to be as high as 1,600 crore rupees. But first up, the numbers. Revenues declined 28%, EBITDA is down 86%, margins at 4.2% compares with a poll of 10%, and it is lower than the previous year margin of 22.2%. Losses at 1,600 crore rupees compare with a poll of around 483 crores of losses, and the stock is at a 3-year low on the back of this. The internals are weak, of course. The volume is a decline this time of 5%. Price has declined around 24%. The company says destocking in North American markets, the European markets, the destocking, that is something that continues to be a problem, especially in the post-patent segment. Working capital days, they have increased to 155 versus 121. Management expects quarter 4 to be weak as well, and they will see recovery only in quarter 2 of FY25. So it has been shifted from the earlier indicated second half of this year to second quarter of the next year. Now, there are some multiple downgrades that have come by. For instance, Jefferies says that they have cut the target price to 635. They expect normalized business from quarter 2 of FY25 versus second half, and that's the reason EPS has been cut by 13 to 15%. Nuvama has downgraded the stock to reduce. Target price has been cut to 486. They see a risk of credit rating downgrade and pressure on balance sheet, and that's why the multiple has been reduced to 11 times versus 13 times. But we do have a contra view coming in as well. InCred has gone ahead and upgraded the stock to an ad with a target price of 694. They say most of the agrochemical majors globally, they are facing headwinds. There is inventory destocking, and in that case, it's very important that you save your balance sheet and vendor base, and that is exactly what UPL did this quarter. And that is something, the reason for their lower receivables. They have been able to protect their vendor base and saving them. The value for UPL, according to them, is 20 times 1 year forward earnings. Stock remains volatile at the cusp of cycle change, but they suggest that one should buy the stock aggressively on dips. So they have an absolutely contra view. But yes, going by the numbers, it's a big miss on all parameters.
Oh, absolutely, Sona. Thanks a lot for getting us all of those details. And the street is in no mood to forgive weak earnings, down 9% on UPL. But let's now bring you a very interesting word as well. Ahead of Ashok Leyland's earnings, today my colleague Danish caught up with the management, Mr. Shenu Agarwal, who's MD of the company, and began by asking him how they really plan to align their electric bus vision with that of the government's, because they have announced a big kind of boost for electric buses as far as the government transport goes in this budget. So listen in to that conversation.
I normally tell people that Ashok Leyland started working on an electric bus, I think about 11 or 12 years ago, right? And at that time, electric was not even a buzzword. Yeah. So I think that way our company is very, very innovative. It thinks ahead of time. Sometimes I feel thinks too much ahead of time, but I think we are very lucky that at that time, a lot of work has happened. And that is the reason that our technology on electric buses is so mature. right? We are in the market. We are the only player in the market with a double-decker electric now, right? And so I think our technology is very mature. I think what we are focusing on now is to extend our product range.
So talking about the company now, you recently came out with the numbers, and as far as the domestic sale numbers are concerned, we are seeing there is slight decline in the past 3 months. So do you feel that this is like a cyclical thing like you mentioned, or you're expecting a major rebound considering that government has also announced another affordable housing scheme yesterday, and there have been big announcements on capex as well. So what about that?
Yeah, see, like I said, I think this whole notion of looking at history and then projecting the future, I think we need to get rid of this. There is no slowness in demand, right? Now, the dip in last 2 or 3 months, or even in January, where we had, I think, 5 to 7% dip in MHCV and LCV, right, is only because of the fact, at least in my knowledge or my belief, is because we had a very high base last year in this quarter, or in these months, in the second half of the year. And whenever you have a high base, you have to have situations like this, right? So I think it is temporary. I think in medium or long term, I don't see any macroeconomic factor which is going to come in the way of CV industry growth.
Very lastly, sir, where do we see Ashok Leyland ending FY24, and what will be the targets for FY25?
See, FY24, one thing I can tell you, what we are expecting is going to be a record year for us in many different ways. Yeah, and for FY25, we have not issued a formal outlook yet. I think closer to the end of the year, we will do that.
All right. So that's the word coming in from Ashok Leyland. They also claim the right of first mover in the EV space way back, about 11 years back. But of course, it's become a big space now. And let's talk more about that. And sources tell CNBC-TV18 that the first EV charging solutions company, Exicom Telesystems' initial public offering, or IPO, is expected to be launched later this month. In fact, my colleague Yash Jain joins us with all those details. Yash, what are your sources telling you? What are you picking up on this IPO?
Well, Nisha, it's the buzzword electric vehicles, and this could be a very interesting offering as far as the electric vehicle space is concerned. India's first EV or electric vehicle charging solutions company could soon go public. What we've been given to understand from our sources is that Exicom Telesystems IPO is expected to be launched later this month. My sources tell me this could be in the 3rd or 4th week of February. As far as the IPO is concerned, the company is looking to raise a total of about 430 crores, out of which about 330 crore, which means a large part of it would be fresh issue, which means that portion of funds, that is 330 crore, would be coming into the company. The company has plans to use this towards various purposes. They have a new plant coming up in Telangana, so part of the funds would be used towards that. Debt repayment is also one of the intention towards which the funds are expected to be used. Sources have also given us some very interesting details on the IPO. According to our sources, the shares could be priced anywhere between about 140 to 145 rupees a share. The company is looking at a post-listing market cap of about 1,750 crore rupees. And as far as the financials of the company are concerned, the numbers seem pretty consistent. Sales FY23 at about 708 crore rupees, profit at about 6 crore rupees. The borrowings as on end of FY23, they stand at about 118 crore rupees. I spoke about how EV business is a big component and has been growing for the company. So out of the total revenue, the EV charging business revenue, the share at the end of FY23 stood at 32%. This was just 8% in the previous financial year in FY22. The total orders received in the EV business, they've grown to about 295 crore in FY23 from just about 78 crore in FY21.
All right, very interesting, Yash. Thanks a lot for taking us through all of those details. The first EV charging solutions company that is looking to go public. We are going to get into a short break on that note, but on the other side, we're going to bring you excerpts from our exclusive conversation with the Finance Minister. Stay tuned, we'll be back in 2. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18, and let's now bring you some excerpts from our exclusive conversation with the Finance Minister last week. So she said that 7% growth rate is not challenging and added that there was no slackness in the economy. She also called on rating agencies to do their job after promising to stick to fiscal consolidation and urged them to take a comprehensive look at the economy. She also added that India needed better data to capture the jobs market because several jobs were not being captured in the current data.
That's right. And Nirmala Sitharaman also said that more work can be done on direct taxes when asked about the lack of relief to the income taxpayers, but stopped short of saying if any relief will be provided in the next budget should the NDA return to power. On the issue of a possible rate cut, the Finance Minister said that the final call will be taken by the RBI and asserted that they would keep growth in mind while taking a decision. Let's listen in to a slice of her conversation with Network 18's Rahul Joshi.
You know, something that has been commented enough, and you've got a lot of accolades for it in this budget. If you look at the fiscal glide path, I think you've beaten estimates. This year you've projected 5.1 next year, so that also looks promising. What is your message to the sovereign rating agencies? You're expecting an upgrade?
Well, I would think that they do their job, but periodically it's our business also to bring it to their notice that economy, particularly emerging market economy like India, despite the odds, we are doing a lot of reforms, systemic reforms, which actually you're seeing is bearing the results now. If only Prime Minister Modi hadn't pressed the pedal, let's say the revving pedal, the accelerator during COVID, even as we are managing COVID, we will have to attend to reforms and continue doing the reforms. The Atmanirbhar Bharat announcements were all infused with so much of reform measures. Otherwise, we wouldn't have eliminated more than 68,000 rules, which were just so archaic and were becoming instruments for rent-seeking people.
Yes.
So, systemic reforms have continued. Whether it was pre-COVID, GST and IBC, together with very many other reforms like professionalizing public sector banks and so on, the emphasis on reform has given us adequate rewards, and we'll continue doing that. That is why even in the budget, we have emphasized on transparency. We have emphasized on getting everything on board the budget process itself, rather than keeping it outside of the budget or underneath the carpet. These are not small steps, and that has been consistently done in the last 4-5 years. And before that, as I said, IBC or banking reforms, the 5 major recognition R's, as we say,
Absolutely.
of the problem. So, to list it, there are so many, some small, some very big. The small ones having very big implication in making the economy much more cleaner and open and transparent. The bigger ones, which are bearing results in terms of the money that you collect in GST, these are not small steps. So that is the one which I would play as important indicators which rating agencies should look at comprehensively, rather than look at just one detail here, one detail there. Macroeconomic stability is also very well kept up.
All right, that is the word coming in from the Finance Minister, and we're going to bring you snippets of this conversation all through the day right here on CNBC-TV18. But for now, we need to take a short break. There's a whole host of national and international news updates that we're tracking, so we'll be back with that on the other side.
Welcome back. You're watching Business Lunch, and let's take you through some news coming in from the entertainment industry. And India shines at the 66th Grammy Awards as they saw 5 Indians bagging a total of 6 awards. Amongst the winners were renowned tabla legend Ustad Zakir Hussain, who bagged 3 Grammys for the Best Global Music Performance. Fusion band Shakti, that also includes renowned musician Shankar Mahadevan, also secured a Grammy for the Best Global Music Album. Amongst others, milestones from the event were Taylor Swift, who earned the Best Album of the Year title for Midnights for the 4th year in a row.
All right, so those are some of the highlights from the 66th Grammy Awards. And on that very exciting note, we are going to wind down in this edition of Business Lunch. So from Nisha, me and the entire team, thank you for tuning in. We have Mid-Cap Radar after this short break.